2023, March 13, Monday. More red signs for economy. A record current account deficit, weaker currency, collapse of U.S. bank signal troubles. A host of new red signs are popping up for the South Korean economy. Bad news for policymakers already struggling to tame high inflation and tackle the economic slowdown. There are three worrisome developments. First, the country posted a record current account deficit in January. Second, the Korean currency is losing its value against the US dollar at a rapid clip. Third, investors are worried about the ripple effect from the collapse of the San Francisco-based Silicon Valley Bank, hit by a sudden bank run and capital crisis. It is not a big surprise that the nation suffers a current account deficit, given the continued troubles with key export items such as semiconductors and rising raw material prices, but the January figure must not be brushed off as a temporary dip, as the scope of downward figures is unprecedented. Korea's current account shortfall reached $4.52 billion in January, compared with a surplus of $2.68 billion in December, the Bank of Korea data showed Friday. The figure marked the biggest ever monthly current account deficit since the bank began to compile related data in January 1980. The main culprits were sluggish exports aggravated by a slower demand for chips and a sharp increase in service account deficit due to rising overseas travel of Koreans following eased coronavirus rules. Exports dropped 40.9% on year in January, extending a downward streak for the fifth straight month as local chip makers such as Samsung Electronics and SK Hynix faced weakening demand for semiconductors from major markets. On a customs clearance basis, overseas shipments of chips plummeted 43.4% on year in January. In contrast, imports climbed 1.1% during the same period. The BOK said the record amount of the deficit in January is expected to return to normal levels in February in consideration of a smaller trade deficit last month. Government officials said current account numbers would improve in the second half of this year, helped by the reopening of the Chinese market that had slowed its economic activities to battle the pandemic. But experts cautioned that its policy makers should not depend on versatile external factors as a reason to remain optimistic. In fact, external elements are increasingly turning hostile for the export-driven Korean economy. While high interest rates and inflation remain unchanged, the Korean won has been under great pressure in recent weeks. The Korean currency closed at 1,324.21 against the greenback Friday, marking the lowest value in 4 months since November 29, when it traded at 1,326.61. The Korean currency rose 7.36% in a month, the steepest fall among major countries, including Japan, whose currency lost 4.69%. The DXY, an index of the value of the US dollar relative to a basket of foreign currencies, rose 2.85% over the same period. This means the depreciation of the Korean won is more than twice as fast as the appreciation of the US dollar. The weakening of the Korean won is largely attributed to the strong US dollar, extended trade and current account deficit, a capital outflow linked to the gap between interest rates in Korea and the US, and an increase of new overseas stock investment accounts opened by local investors. The U.S. Federal Reserve Board is now expected to increase the pace of rate hikes, as its chairman Jerome Powell cautioned the rates are likely to head higher as the latest economic data came in stronger than previously expected. The tighter monetary policy of the U.S. Fed is feared to widen the gap in interest rates between Korea and the U.S., posing a dilemma for the BOK, which held rates steady at 3.5% last month. The sudden collapse of SVB, a tech-focused lender, marks the second biggest bankruptcy of an American bank in history, as SVB's key clients are tech and healthcare startups that are concerned about the possibility that other startups and banks might confront similar liquidity problems. The woes at SVB already alarmed Korean startups and venture capital firms with deposits in the bank. The government's economic policymakers are urged to come up with policies to tackle the ballooning current account and trade deficit, while keeping close tabs on the growing volatility in the foreign exchange market and the spillover effect from the collapse of SVB.